But stock of the day, I thought we'd have a look at GUD. Out with a market update stating underlying earnings for the year should come in around $150 million. It says that it's expanding its portfolio, but it is warning about supply chain issues. This is a profit downgrade that came through. So what do our experts think about this one? GUD, if you're talking about value coming into the market, I mean, that is an update that many would debate whether it warrants a near 20% sell-off today.
Oh, look, yeah, I just can't help but think this is a little bit overdone today. Yeah, but obviously supply constraint issues have affected them with the China lockdown and the Ukraine crisis, of course. At their EBITDA, what they've downgraded is from 160 million down to 147 million. Not much of a downgrade, but really to be down 21.5%, I don't know. I certainly wouldn't be a seller down here, that's for sure. I think down here it's even accumulate in my view. But look, they have got supply constraints like many other companies out there. So, but I just think it's overdone down here personally. And again, I think with a lot of fear out there creates opportunities, and this is possibly one that at the moment. But you wouldn't be going guns blazing at the moment. But certainly at this price level, look, it's a solid business. I wouldn't be adverse to picking up some shares down here.
I'm going to call that a buy. So we're seeing GUD evolving toward the auto parts aftermarket. It has made some acquisitions, so really getting into that ability to service some of those, the SUVs and four-wheel drives as well. It's got a pipeline of further acquisitions. Is GUD looking good value today?
Look, I think at best I'd sort of be calling it a hold now because obviously, the damage has been done overall. It's not that bad. You're certainly not that bad of a business to be selling it down here. I've always found it a bit of a complicated business. There's a lot going on. Their accounts are all over the shop. Inflation, I think, is going to hurt their margins a little bit. The rise of electric vehicles as well is, from a long-term perspective, is going to... there's a lot less parts in an electric vehicle. With oil prices up here and petrol prices the way they are, I think that trend's going to, very solidly switch to cars that aren't going to need as much servicing, etc. But look, as David said, it's not a bad business. Another example of, Aussie Broadband, all they did was lower the top end of their guidance, and since that point they're down nearly 40%. So, down 20% is not. These guys seem to be almost giving, from what, they're a little bit, they move their guidance around a little bit too much. And I think, they've almost created their own problem here. Other options in the space is maybe ARB, etc. But yeah, look, it's,
okay.
Yeah, it'll just be a hold for me for now, yeah.